What's up guys, GGFOREX here, welcome back to my channel, and on today's video I'm going to give you a quick update of what I've learned, what I've discovered, how I've changed things, what I've missed out on, and how frustrating it is trading whilst having a 9 till 5. Now, I know you guys can relate with me with that respect, and like today I missed out on a trade by 0.8 pips on EU. It was very annoying. But then on the other side, I managed to get a 1 to 5.6 on EG, which was a counter trend trade, and it was a beautiful setup. I took the trade and it worked perfectly, right? So I'm going to be showing you what I've discovered, how I've changed things, and I'm going to be doing a few like trade playouts, replay tools, and show you what I've been practicing every night to get the patterns burned into my brain. I've been rewinding price, seeing where it reversed, seeing what I want to look at, seeing how I want to play the charts, and then seeing if I could have done that with a 9 till 5. Could I have done that during the Asian session? Would the pending would have worked during that time? And all that sort of stuff that gets confusing, and you understand, how am I going to work around this? How am I going to get good reward to risk? How am I going to trade it whilst trying to get a funded account? How do I trade it with the rules in place? Now, trading with someone else's rules is very difficult and very different to trading with your own account. When it's your own account, you got no rules, it's a numbers game. You know you have an edge, you can play that edge. You could lose the first 20 trades in a row, right? You lose the first 20 trades, yes, you're going to be a bit emotional about it, you're going to be a bit stressed, you're going to question things, but if you play out that edge, you know it's a numbers game, and you understand over time, over 100 trades, you're still going to be profitable, right? But when it comes to a funded account, that's where the game changes. You can't afford to lose 20 trades in a row. Even if you know you will be profitable over a large sample of trades, like 100 trades, they don't allow that. You can't have a bad day, really. I mean, you can, but you have to risk manage. So if you've got a target to hit, like 10% in the month, it can be quite difficult unless you get kind of a good run with a medium risk level on the cards, like a 1% risk per trade, right? So to get to that level whilst having a 9 till 5 and trying to take the risk factor out of it is what I'm gonna try and explain to you in this next video. So buckle up, enjoy, let's just jump on the charts. Right guys, I hope you can see me in the corner. So this was the euro pound trade I did. It was on a 30-minute time frame. I didn't highlight the area, but it was in a 4-hour point of interest. I saw price compress. I saw the little semicircle being performed. I saw a nice area where price just shot away from in a logical area. The only worrying thing about this trade that I had was the equal lows that it created, so it's also a target. But then if I have a look at what was actually happening, I've got price coming down, I've got strength coming up, I've got equal highs above, and this was a nice get in, get out trade, 1 to 5.6. I think my original TP was up here somewhere, but I just wanted to get in and out after having like 8 losses in a row, 9 losses in a row, getting a 1 to 5.6, almost a 1 to 6. It was just a good news day. It's just get out of that, let's continue going. And for those of you who want to know what's going on with FTMO, I'm going to ask for a extension to the profit split month on my 10k account. So basically what I'm figuring out is how do I test out my FTMO strategy, slash how do I trade it with a 9 till 5, slash how do I trade it to be more safe, how do I trade it to be more profitable in the long run and be safer and protect my capital and all that stuff whilst using other people's money, which is a genius way of thinking about it, because if I lose this 10k account, I've already made 10 times that already from that 10k account, so I can just get another one and I haven't actually lost any money at all, and I'm getting amazing knowledge and information and data from all those trades as well for absolutely free, or getting paid for it basically. So that was my EG trade. It was very good. Now let's just walk on to what I've been practicing, what I've been studying, what I've been researching. And this is basically what I'm going to do. So this is a follow-up trade. If I just delete that for now, because I'm not going to need it. Right, so this, I'm going to get rid of my sessions. I'm going to go to the 4-hour time frame. So what am I seeing on GCAD. This is what I've been doing, this is how I've been practicing, this is what I've been implementing in my spare time at night after work for many hours, just to burn the patterns in my brain, and it's eventually getting in there. So what am I seeing? I'm seeing on the larger time frame, I've already drawn out a few things. Price came up, made a large pool of liquidity, came up, took those highs, took out the retail traders, pushed price down, made targets down below. So if you can see this here, made targets down below. Also, it's also on a trend line, which is again more liquidity. We have also got targets down below here, and there is potential. Let's see this. Right, so it created equal highs up here, bang, taking it. So basically I'm repeating the same pattern. Bang, taking it, move down, made liquidity, bang, taking it, move down, taking liquidity. Now before, what I would do, right, this is where I was going wrong. I was setting pendings, but now I'm setting alerts. Because it's in a higher time frame point of interest, a 4-hour candle, I'm setting alerts when price gets into this area. And then what I'm doing is I'm observing price, waiting for reasons for me to confirm that yes, I was right. I am expecting price to retrace in this area. Now I'm finding evidence in that area for price to retrace. Now let's look for a tighter entry that I can get in and out of the market. Right, so let's just drop down to a 1-hour time frame, and I can see price is coming up. So price is stepping up. First thing I see is divergence. Divergence is coming down. Price is making higher highs. The RSI is making lower lows, right? So that's a good sign. High time frame divergence in a key area at a premium level. What else do I want to see? I want to see manipulation in this area. So I want to see highs getting taken where they're shaking out the early sellers, right? So let's just have a look. I think it's a 20-minute time frame, right? So let me just put my rewind tool on. I said it doesn't freeze. Right, so obviously the lines are already going to be drawn out, so I'm not going to be doing them again, but I'll explain to you what I'm seeing at that time, right? So I'm going to put the sessions on. So the sessions are green is London, orange is London, New York cross, and red is just New York, and black is Asian, okay? So I can see price, let's just speed up a little bit, make it easier for you guys. So one thing that I'm seeing is I'm seeing targets happening. So we've got equal lows being created, we've got like a buying climax, so we've got price making a high, you've got divergence making a low, it's stagnating out. So let's just keep playing it out, see what happens. Right, so that equal low's been taken, seeing that there is some sort of weakness. Price does want to come down, we have the automatic rally back up. We do have liquidity above our targets. I'm just basically waiting for that to be taken, and what I want to see is the other high be taken, because as you can see it's taken some liquidity but then created more liquidity. I want that to be taken, so that's why I have this yellow bar up here with also an alert. So when that liquidity gets taken, then I'm more interested, because now all the reasons for the price to go up have been taken out, they have been manipulated. The next areas of liquidity are still in the game, which is to the downside, so I'm looking for sells, right? So again, it's going with my bias, I'm seeing more proof. Let me just zoom in, and let's play this price out a little bit more. Right, so price has now taken it, right? So we have come to a London open, which created liquidity. New York crossover, so London, New York cross, we have now manipulated that liquidity created by the London session. So what I want to see now is I want to see price break this swing to confirm that the sellers are more in control and the banks actually want to push price to the downside. So as you can see, I've marked it up with my 20-minute open, which is up here. Right, so now price has closed below this area. So one reason why I didn't get into the trade is because I kind of didn't like how price retraced to that. It wasn't a clean, it's kind of dirty, but if I stuck to my guns, if I was less cautious, it would have worked out fine. And what was I targeting? To me, we do have equal lows down here, but they are a bit far away. So for me, wanting to get in and out the market, not wanting to hold trades too long, because again, when you're in a funded account, you kind of want to take the risk off the table, get the money in, then you have more to risk, or not more to risk, but you have more of a cushion when you take your next trades. When you have trades open, it still takes in that risk management. So FTMO, if you've got 4 trades pending and you're down 2%, and let's say you want to get into another trade, you don't want to be over leveraging your account. Remember, I'm only doing a swing account. I've got 1 to 30, not 1 to 100. So you need to bear that in mind of what's open, what's closed, and how much you got left. So for me, closing trades in profit, you're not going to lose money closing trades in profit. Even if you could get more, I'd rather wait for a re-entry than just hold that trade to oblivion, right? So let's just do our trade planner tool on this. Getting in at the high, stop loss above that high, a little bit of padding, fill the imbalance. So we've got a 21 pip, that's a bit too much for me. So at 20 pips candle, and if you want to take the swing low on this, 1 to 3.5, which isn't too bad at all. But if you wanted to come down here, I'm going to go to that one. For me, I am expecting price to go a lot lower, but again, do I want to be in the charts longer than 73 pips? My TP is 73 pips away. If I have a look at what it did the previous day, how many pips did it move? The tool you can use as a measurement tool in TradingView, and just measure that move. That move was 90 pips, so by me having a 70 pip take profit, what's the probability of that take profit being hit very recently? It's quite a lot higher than it is if I was going to try and do like a 200 pip move, right? It just adds more risk to the table because I'm in it for longer. Let's just play it out and see what happens. So your price came up, mitigate me in. Let me just slow this down. Then what do we have? We can get a re-entry in on this area. Again, I wouldn't do this because again, I'm at a 9 till 5. What happened right at London Open? Bang, we got in. So I could see this the previous day. That night, I could set the pending after the crazy sessions between the New York close and the Asian Open. When those crazy spreads stop at 11 p.m. GMT, then you could set the pending. And then you could wake up. I mean, you might start work at 8 o'clock in the morning. That's when London Open happens. This when this trade triggered. So let's say you didn't want to do that and you want to set another alert and you were at lunch. You could get in on this trade again for a re-entry, right? So again, 20-minute time frame. Have it above, and let's say you have the same TP. So let's just assume that you missed that trade and now you got to get in for another trade. So the first trade was a 1 to 3.5. The second trade was a 1 to 3.5, basically, right? Or you could get into 2, depending on how you risk manage. So that trade got in really quickly, and again, you had another re-entry possible on the New York-London crossover. So that was at 1 o'clock in the afternoon, right? So you could have got in on a re-entry at 20 past 2. So an hour and a half-ish, you could have put that trade on if you had time, if you have access to the charts. Again, everyone's different, and let's just play this out a little bit. Oh, and that's where the price is now, right? So price still hasn't come down here yet. What's the probability of price coming down to this part? Very high, looking where it is. It's only a matter of time, right? But you could have got a 1 to 7 or a 1 to 3.5 on those 2 trades. So that's what I'm doing. That is what I am implementing into my strategy. I'm setting alerts. I'm waiting for evidence in that area for price to reverse. The only downside with this is that you're going to miss trades, okay? So sometimes it just touches and disappears. So if I show the EU trade that I missed today that I've already shared with the group by 0.8 pips, which was brutal. I had it marked up. I had the 45-minute area marked up. Okay, so it was here. I'm looking for a re-entry on this again. Okay, so I had this marked up. It hit beautifully, right? My TP's down here. It would have hit beautifully. It is a short-term trade, 16 pip stop loss, 42 pip take profit. I had liquidity. I had this, taking liquidity from the early sellers, making more liquidity to the downside. That caused it. That was my entry. But I wanted to get a tighter entry on this. I think it was the 10-minute candle I was going after, which was this up here somewhere, like that, with a little bit of fat on it, but it missed by 0.8 pips. If you want to see that picture perfect of what it was, it is in the GGFOREX Facebook group, links down below. So again, why did I take this trade? Okay. I can see price stepping down with the order flow into an area where I believe price is going to go to, right? It's also mitigated a 1 hour candle up here, which was the only outstanding factor. This candle did it. It created more liquidity, and then I was retargeting the area that mitigated that 1 hour candle in the first place, right? Because this candle took out liquidity over to this side, also mitigating bankers candles to there. This took out that liquidity, the equal highs up there, mitigating that candle, and I was repeating the same pattern as the order flow was coming down. Now it's only going to be a short-term sell because I believe that price is at kind of a discount level. So I don't really want to be holding this for a long period of time. Again, just to the grey area where we have some imbalance and manipulation happening to the downside, right? And also where buyers were buying off the trend line. I feel like that's an area that's going to be manipulated in the future. So that's why I was targeting it. But how could I have done this if I wasn't at work and I was using the same method where I'm setting alerts in that 45-minute candle? What can I look for? How do I trade it if I wasn't at work, right? So for you guys who don't have work and you don't have to set pendings and you have time to watch this, I envy you, okay? Okay, so right, let me just get my replay tool out. Let's just do this. Okay, so this is what I want you to practice at night as well, guys. This is golden. If you're not taking notes, you're not taking trading seriously, because this is absolute nuggets, right? So let's say I put an alert on this first purple line here, okay? Let me just get rid of that. So as I said, it opened, it mitigated the 1 hour open of the candle over there with this candle. What was left? This 45-minute candle, right? It's created more liquidity, expecting price to come back to that area. Right, now I've got the notification, I've got the alert, I've got the ding, I'm coming back to the charts. Let me just break down to a lower time frame to see what is going on, right? Let's just go again for lower. Right, what am I seeing in this area? I'm seeing compression in price. So what I'm seeing on the higher time frames, I'm now seeing on the lower time frames, because price is fractal. What have we got? We got price creating liquidity, price took it, right? In a key area of a high time frame. Not only is price creating liquidity and taking it, price is stepping up, RSI is stepping down. So again, more confluences. Now, what am I looking for after that? Price breaking structure. So price has broken this low, right? It's broken it, showing me weakness to the downside. So what would I want to do? I'll maybe go slightly higher. There's a beautiful 10-minute point of interest up here, okay? So if I want it to be super sneaky, let me just delete the one behind it so it's easier to see for you guys. Short term, boom, boom there, a bit higher. So we got a 4.5 pip stop. Again, must bring in your what do you call it? Must bring in your risk management, making sure that you're not making sure that you are including your spreads, understanding that price can go higher, there is imbalance, and there are candles above, right? So you need to make sure that you've got all of that checked. And where do I think price is going to go? This 5-minute candle down, manipulating the lows, pushing price higher. So it hasn't been filled. So I'm going to say roughly here, so just under a 1 to 5. Let's just make it 1 to 5 for a laugh. There we go. So let's just play out price on the 10-minute time frame in a key area and just see what happens. Boom. Right, so that's what happens, right, when you don't have to have work. You're in a key area, you set alerts, you wait for patterns to happen, you wait for proof, you wait for confluences, and you take your trade. That's how I want to trade. It's not easy to do when you have a 9 till 5, like I said with what was it? I forgot what it was now. Pound CAD. It happened the day before, so I could set my pending, and then over Asian, that's when the move happened, right? But it's not going to happen all the time, and you will miss trades. I've missed out on EU. That is just the way it is. But this is how I'm taking my trading now. It's going to take longer. It's going to take more time. But one, it's going to be higher probability trading. Two, it's going to make sure that I'm taking the higher or the least risk trade possible, rather than setting pendings and letting price do what it does. It's great, it's fine, but when you're in a funded environment, you can't really afford to have those losses. You can't really afford to play the numbers game because you don't have the numbers to play with. And I hope that makes sense to you guys, that you really need to have a good run to begin with whilst you're in a funded account to get your 10%, to get it in 30 days. When you already have a funded account, you can take things a lot slower, doesn't matter, and a personal account is the ultimate goal. FTMO, funded trading, all these funded platforms, use them as tools. They aren't a means to an end, they are a means to give you capital to them for you to make the real money. And the real money is in the personal account. That's the game-changing level, and that's where the Uber strategy is. And I just love that thing, right? So guys, I hope you found this knowledgeable, I hope you found it helpful, and I hope you can implement some of these things into your trading. If you are struggling like me, where you do have a 9 to 5, you can't trade it, and you do need more time on the charts, this is a way that you can tackle it. This is a way that you can confirm of what you're thinking is gonna happen is actually gonna happen. But yeah, if you like this video guys, like, share, subscribe. I will be making a lot more videos, a lot more consistently. I know I keep saying that, but things getting mental, and at the end of the day, I just want to 100% solely concentrate on my trading to take things to that next level, and then take the higher challenges on top of that. Because I want to 5 on a 70k account at 0.5% risk is 3.5 grand, right? Or is it 1,750? 1,750, right? 1% risk, 3.5 grand. It's absolutely mind blowing, right? And you can do it within a day, especially when you're only trying to get 23 pips. So, like, share, subscribe. I'll see you on the next one, or I'll see you in the GGFOREX group down below.